Good morning and welcome to this weekly market update from AGM Markets. Today is the 9th of July 2013. What I'm going to do today is go through some technical analysis on Euro Dollar, Cable Dollar, Swiss Dollar, Yen, Euro Pound and Dollar CAD. Just review what's been going on in the markets and just go through some setups that I think may be useful for you. Basically just commenting on price action, focusing on the sort of daily chart for around 1 hour. May flip it to the weekly for some context. We do have 3 moving averages in each of these charts. The red one is a 50 simple moving average, the blue one is a 100 simple moving average, and the gold is a 200. We're not making any trade calls recommendations in this video. You trade at your own risk. If you could please read a full disclaimer on our website www.agmmarkets.com. Okay then, this is the Euro Dollar daily chart. And the first thing that just springs to mind here is we have a lovely little trendline support that's going on here. Last week we had the NFP, good number, brought it down, and we've bounced off this this trendline support. What we have been speaking about in the last sort of few weeks videos on this in terms of the daily chart was this fib here from the highs to the lows there. Initially came off the 50%, came back down, but then it broke above, came above this 61.8, but it's sold off regardless, so it hasn't really been that technical in terms of the fib on this one. I mean, it was initially technically, but then it's just blown up here, and it came off of the basically the 134 handle. That's the 134.00 level. That was the key resistance. You can also see around here on the left it was key resistance up here as well, with a nice spike there, and that got held and came back down. So yeah, you can see that also quite clearly on the weekly chart as well. What is actually quite interesting on this weekly chart, so I've gone to daily to weekly here, but what I do think is quite, I should delete that that resistance there. What is quite interesting I think on here is if you draw the fib here, the sort of the obvious fib, what's going on here. So from, you have lows to highs, and you see it's just making in between, the buyers are coming in between this 50% and 61.8% zone, and it's making higher highs. Of course, we've had a weekly candlestick close below this 50%, so what could happen, and as we're already sort of starting to see here, is that this weekly candle has popped up off this trendline support and is now getting held at the 50%, so previous support now acting as resistance, and yet we're getting held here. Also on this weekly, you got, this is technically a nice support level here as well, the one sort of 27.92, so you pretty much could say that's 128 handle. So you got some, it's quite tight at the minute. You got a nice interesting support level there, 128. You got the higher lows as well, the trendline support, but also this 50%. I wouldn't be surprised to see this hold. So we really need some sort of close either side here. Maybe if you flip it to the daily, you can see that much clearer actually. So if we're going to break below, then we need to get daily candle close below this trendline support, in my opinion. Or if we're going to start popping to the upside, then we need today's daily candle at least. You can already see it's starting to form a bit of upper wick there. It really is reacting well to that 50% level, so we need to see a daily candlestick close above that to get some sort of pop up. But even if it does pop up, I wouldn't be surprised to see it sell off at one of the moving averages here. So I'll just clean this up a bit. So let's say if it did start to pop up, then this is one fib I'd definitely be looking at for sellers to come in, or they could just already get sold off at one of these 3 key moving averages here. Of course you've got the 200-day moving average just below this 50% as well, so it could get a front run a bit. But also you got this resistance level around here coincides with the 61.8 to the pretty much to the pip there, so you would not be surprised to see some sellers coming in at that level, which is the one spot 31.73. So very interesting week, I think, on euro. Very pivotal week here for the longer term moves. A lot of stuff going on there, and that's how I really would. So if you go into the much shorter time frames, you really could get chopped up here. It can get quite a bit messy. So for context, and of course this is a weekly video as well, so we want to keep it a little bit longer term, so it's still valid for the next sort of couple of weeks really, but that's what I'm sort of looking at on the euro dollar chart. Cable getting very heavy. You even see that on today's daily candle. I'm just going to flip it to the Forex calendar here. We had some data just out a minute ago at 9:30 with the manufacturing production numbers month on month weaker than minus 0.8% against a forecasted 0.3%. So poor manufacturing figures there from the UK. Also had worse industrial production figures as well. They're forecasted at 0.3% and came out at flat 0.0%, so a decline there as well. So that's why we're seeing a heavy candle currently on the cable. You can also see, but we're at a very interesting point here. We're testing key support here, which is also the yearly lows. Well, the yearly lows exactly are around 1.4830. Yeah, bang on there. But if you can see where we've already got bought up and we haven't had a daily candlestick close for a while, 1.4850s here. So that'll be a key level today. If we come down, it looks like he wants to come down and test it. What's going to happen at that? If we break that and get a daily candlestick close below, then we really could fly down here. So if you flip it to the weekly, you can see there's a lot of room to go down here to the next key support on the weekly, which is the 2010 lows at 1.4220. So you've got about 600 pips there in terms of room that I could technically go down to here. So you can see the last 3 weeks have been very bearish indeed on cable. We really have come a long way down. I mean, we're talking about 900 pips here in 3 weeks, so from 1.57 to 1.48. Yeah, we're talking roughly about 800, 900 pips there. So very aggressive sell-off here in the pound against the US dollar. I suppose it's a mixture of the tapering thing going on in the US and just general weak data out of the UK really. So if we do get a bounce in cable, let's say if it comes off the support, then the most obvious fib is this one here. So let's say it starts to pop up. I don't know why it would pop up in terms of fundamentals. Then that 50% comes in at 1.5301, so pretty much bang on the 153 level. And also you've got a confluence here of the moving averages. Also, it's 50 days just crossing down below the 100-day moving average. And also, I shall flip it to the 4-hour here because I think something will be interesting here. You can see these candles here, previous resistance sold off here, the 50 SMA. So if we do get a bounce up, then this fib will be a very interesting one to watch. Of course, we break the lows and I still extend it down just in case it does get a pop up. But if we do get a bounce for whatever reason, then I would not be surprised to see us get heavily sold off at that 50%. So similar to euro really as well. We're looking at two very similar moves there in terms of the Fibonacci retracements. Same setup. It's always good to look at the most obvious ones in my opinion. So that's from the July highs to the June highs to the lows here. That would be the July lows. Okay, let's have a look at the dollar Swissy. Pretty much an opposite chart from the euro dollar. So if we get a retracement here, then this is the fib that I'd look at. Today's daily candle was looking starting to get a bit of upper wick form, so it could perhaps top out here. Of course, it could keep on grinding higher. That is the fib I would look out for. Nothing else much of interest really. It's just been very, very choppy. And yeah, that is literally all I'd personally be looking out for on the dollar Swiss. Of course, you've got the MAs here as well. So If it comes down, it could bounce off that. But in terms of the fibs, that's the one that I'd be looking out for personally. But no, nothing much of interest on the dollar Swiss, to be honest. There's more interesting charts out there. Unfortunately, dollar yen isn't really one of them. It's just been quite a boring chart in terms of the weekly. That's still the same fib I'd be looking out for, or you can draw the one from these lows here. In terms of the shorter time frame, I mean, the thing is that it's just been on the weekly. There's so much room for it to come down that buying opportunities I'm not massively a fan of. I prefer to play other charts. But if you do want to look at buying opportunities, the one I'd personally be looking out for would be this fib here. If you're looking at a shorter term bounce, this could indeed be one here. Just see how it reacts to the 50%. If you get a nice little reversal candle or something, then that could be a telling tale sign. Also, there's a bit of previous support here as well. If you look at those candles there at the sort of 97.64, so that'd be one dip. That could be an interesting buying opportunity. Also, the 61.8 actually coincides with the previous high around here as well, so that could be an interesting level. And also, yeah, that's a very interesting level. That 96.67 is also previous support around here, so key level there if it does come down. But of course, it's a long way away from that. Also got trendline support here as well, which is holding nicely, but it's just such a very strange chart, dollar yen, really. Not been massively technical. Much better charts out there, but of course Japan just keep on weakening their currencies, so that is why we're seeing a very weak yen against the dollar. Of course, the Federal Reserve are thinking about tapering as well. So in terms of the fundamentals, I mean, it's the ultimate fundamental play to be long dollar yen at the minute, and that is, you can evidently see on the sort of weekly chart, it's just absolutely flying up the handle. Euro pound, I've left this fib up from the last video. I'll zoom in here so you see a bit clearer. A bit of a messy fib, but it has been reacting very well to that 61.8. We got a nice little reversal candle there. It ripped up, then came back down, spiked low, popped up, and we've broken the highs. So that is what has been happening on the euro sterling. Trendline support is well intact there. In terms of the sellers, I would not be surprised to see them looking at this fib here from the highs to the lows. You can see it currently testing the 61.8, which is at 0.8639. So it'll be interesting to see what the daily candle is today. If we get a decent bearish candle, then we could come back down, but it is looking still very bullish, really. In terms of this daily chart, nice trendline support, been holding for a long time. And with the weak UK data constantly coming out, the fundamental case would be to stay long euro really against this pound. But of course, the candle action, see what happens. If it's a bearish candle, then we could come back down. And if we do break this trendline support, then we really could fly down. So there's plenty of room below that. Now, of course, actually, in terms of the MAs, we've got this 50-day MAs crossed up above the 100-day MA as well. So there's a lot of people see that as a bullish signal. So keep an eye on that one. Dollar CAD, I've left this trendline support up. It's just been floating around here, really. Looks like it's starting to top out. Wouldn't be surprised to see it top out and come back down to this trendline support, see what candle action happens there. Also, this 200-day moving average coming in at this trendline support as well, so a nice bit of confluence there. But these dips here we've spoken about before, lovely fib dips here after 61.8s. This one also here was a 61.8, but would have preferred it to come down to the trendline support, as you would have had a nice bit of confluence there. So, but of course, as it's been playing 61.8, a lot of people, I would suspect, will just be drawing this fib here, waiting for it to come down to 61.8 and just buying there with tight stops. But I personally would prefer it to come down to the trendline support, so you have a nice bit of confluence there as well. Another way to look at it would be to draw a fib here, this low fib here, down there, and see if the trendline then comes up and has a nice bit of confluence with the 61.8. There's many ways of looking at it. The best way is to look for the candle action, see how it's reacting, in my opinion, and see if you've got a nice bit of confluence there. Okay, that's done for the charts. Have a little brief look at the Forex calendar, see what's coming out for the rest of the week. In terms of today, the headline data has already come out, really, Chinese CPI and the headline UK data coming out. Tomorrow, overnight, we need to have a look at Aussie, actually, maybe we have a look at that next week. Got some Aussie data there at 1:30 AM. We've got Chinese trade balance tentative. Quite a bit of mid-tier data. In terms of headline, though, you have the FOMC minutes at 7 PM tomorrow, and of course Bernanke speaking as well. So that'll be very interesting to see what they say about the interest rates and about the tapering. It could get quite volatile there. On Thursday, we have some more Australian data overnight. And also have the Japanese BOJ press conference as well. 1:30 of the weekly jobless claims. It's forecast at 342,000 from the previous 343,000. So expected to come in pretty much in line there. And on Friday, of US PPI at 1:30 PM. GMT forecasted at 0.5%. It's the same as the previous. And to finish off the week, we have US preliminary University of Michigan consumer sentiment at 2:55 PM. A better number there. So quite a quiet week in terms of data. But of course last week was a very busy week in terms of data, so that's normally the case. But of course the charts will be moving. We've already had some decent moves this week. So yeah, just keep an eye on those setups. Hope you found this video useful. If there's any other pairs you want to have a look at next week, then feel free to comment under the YouTube video or give us a tweet on our Twitter feed, which is at AGM Markets. Yeah, hope you enjoyed this video. Have a great rest of your trading week, and I'll catch you next week. Thanks for listening.